Have you ever wondered how a banking system can function without charging interest? Welcome to the world of Sharia banking, a banking system that operates on principles laid down by Islamic law, or Sharia. In the next 7 minutes, we'll dive into the fascinating principles and foundations of Sharia banking. To understand Sharia banking, one must first grasp the core principles of the Islamic financial philosophy. At its heart is the belief that all forms of business and trade should be conducted ethically, fairly, and without exploitation. This philosophy is guided by the principles of Sharia, which forbid usury, or the act of charging interest on loans, a practice known as riba. Sharia banking operates on the principle of risk sharing, where the bank and the customer share the risk of any financial transaction. This principle, known as musharaka, is a cornerstone of the Islamic financial philosophy. It creates a system that is fundamentally different from conventional banking, where the burden of risk is typically borne solely by the borrower. A second key principle is Murabaha, a form of credit sale where the bank purchases an item for a customer and sells it back to them at a higher price. This price includes a margin agreed upon by both parties, and the customer repays the bank in installments. This is not considered interest, since the profit margin is known upfront and remains constant, regardless of the repayment period. The third principle, ijara, involves leasing or renting. The bank buys an asset and leases it to a customer for a fixed period. At the end of the lease, the customer can choose to purchase the asset. Again, this is not interest, as the payments are for the use of the asset, not for the money lent. Finally, there's Sukuk, or Islamic bonds. Unlike conventional bonds, where the investor lends money to a company or government in return for interest payments, Sukuk holders own a share of an asset along with the income it generates. Now let's summarize what we've learned about Sharia banking. It's a banking system that operates on principles of fairness and risk sharing, guided by Islamic law. It prohibits the charging of interest or riba, and instead operates on principles such as musharaka, murabaha, ijara, and sukuk. These principles make Sharia banking a unique and ethical alternative to conventional banking, one that is gaining popularity worldwide. It's a fascinating world where finance and ethics intertwine, creating a system where everyone involved shares both the risks and the benefits. Welcome to the world of Sharia banking, where finance truly serves the people.